We turn now to economics experts. He's Dr. Michael Busler. He's a public policy analyst. He's a professor of finance at Stockton University in New Jersey. You've seen him as a featured columnist at Newsmax, LifeSat, townhall.com. Dr. Busler, good to have you back on, sir.
Good morning. How are you? It's my pleasure to be here.
Yes, sir. It's always great to have you. Good morning to you. Now, I wanted to have you on because we've got this topsy-turvy thing going on with the stock market over the last 2 days. The Dow, what was it, more than 800 points in 2 days? And then yesterday, though, I think it closed up. What can you tell us about what we've been seeing with the stock market?
Well, the stock market is reacting to a few things. So, look, basically, when somebody buys stock, what they're willing to pay for stock depends on what they believe the future income of the corporation will be. So if you think business profits are going to go up, that'll mean stock prices will go up, and people are willing to pay more. If you believe the corporation's profits going to go down, and then that'll take stock prices down, you're willing to pay a little lower price today. So there was some information that came out that indicates maybe the economy is slowing a little bit, and if that happens, then of course corporate profits go down. Now, did the market overreact to this? Because this has happened 2 or 3 times in the past. Last December, we had a big sell-off, you may recall, and it did recover quickly from that. So investors today are mostly nervous and very uncertain about what's going to happen in the future. The recovery from the last recession is now more than 10 years old, and that's much longer than the average recovery lasts. So that gets people a little bit nervous. The other thing is there were a couple signs. Manufacturing is slowing down a little bit. The service sector of the economy is still growing, but not quite as much as we thought. In about an hour, we get the unemployment numbers for the month of September. They're probably going to show that the economy added about 150 to 160,000 jobs. That's not bad, but it's below the nearly 200,000 jobs per month we were adding last year. So there are some signs the economy is slowing. I don't think we're heading for a recession anytime soon. I think part of the slowing is due to the Federal Reserve, we know, did overreact with raising interest rates and tightening up monetary policy. So as you may recall, from the end of 2016 and to the end of 2018, the Federal Reserve raised interest rates 8 times. And then last year, they reversed some of their quantitative easing by shrinking the money supply. Now, all of that will tend to slow economic activity. The Federal Reserve, I think, realizes they overreacted here. So in July, they dropped the interest rates 1/4 point. And a few weeks ago, they did that again. They probably will drop them again in December. And I think that will be enough to level off the economy and probably avoid a recession and bring us back to better economic growth. The consumer sector is still looking very good. That accounts for about 70% of GDP. Consumers' wages are up. Their total income is up. Inflation is relatively low. Virtually anybody today who has any skills and are looking for a job should be able to find one. There are 7 million job openings now and only 6 million unemployed people.
Wow.
So I think that the stock market overreacted a little bit, and I think we are slowing a little, but I think that'll be reversed in the short run. I think we'll get back to better growth shortly.
So a couple of weeks ago, I did see where the Fed said they were going to pump billions and billions of dollars a day into banks or something. I'm not really clear on it. It's supposed to end here at some point in October. I mean, they're only doing it for a couple of weeks. Where is that money going, Dr. Busler?
It ends up going to banks, and it increases what we call bank reserves. That's how much banks have to keep on hand. What happened was, after the recession, to get out of the recession, the Federal Reserve vastly increased the money supply in a program they called quantitative easing. And they did that by purchasing government bonds that were held by the public. So the public's holding some bonds that's not part of the money supply. The Federal Reserve says, we'll buy those back from you, which they do, and they pay the people for them, and then the people have more cash, and that increases the money supply, and theoretically, that's what really brought us out of the recession. Now, the money supply is much larger than it should be, based on economist formulas. So last year, the Federal Reserve pulled $500 billion out of the money supply. That created a little bit of a liquidity problem. There wasn't enough money going around in circulation. And to reverse that problem is what you're talking about. They're pumping some reserves back into the system. Basically, the idea is they reduced the money supply too fast also, and now they're reversing that to avoid any liquidity problem.
I read a story this week that Wall Street very worried about the potential for an Elizabeth Warren presidency. Why is that?
Well, so Elizabeth Warren, Bernie Sanders favor increases in social programs, Medicare for all, paying for students' college tuition, a number of other programs. So to pay for that, they say they're going to tax the wealthy, which they'll start out doing. Eventually, they'll have to tax the middle class too. But so they're going to tax the wealthy by putting on not just income taxes, but perhaps even wealth taxes. So what happens is that reduces the amount of capital that the wealthy have to invest, which means less money going into business, less money going into the economy, and it will tend to stagnate the economy. So Wall Street is afraid that all of these increasing tax ideas will end up reducing capital formation, tending to stagnate the economy. That's bad for Wall Street, and more importantly, is very bad for Main Street.
I mean, yeah, that's a no-brainer. I mean, these guys they're socialists, and so Wall Street, still has some, remnants of capitalism in there. We're talking with Dr. Michael Busler. So how does Trump's impeachment factor into this market volatility that we've seen over the last couple of days?
So what investors fear the most is uncertainty. If you know what's happening, whether it's good or bad, you can react to it. When you don't know what's happening and you have that uncertainty, it creates problems for investors. For businesses, their investment, capital investment into the economy, has been going down a little bit. And after the big tax cuts in 2018, it should be going up significantly. Well, the reason for that, again, is the uncertainty caused by a number of things. One, the trade war, but most recently is the idea of impeachment. And it doesn't appear to me that I don't think Trump did anything that's impeachable, and I read the transcript of what he said. But the Democrats are determined to impeach the president, which they have been literally since the day he's been elected president. And I don't think they're going to be successful, but who knows how this world operates today. So investors are thinking the same thing. We don't know what's going to happen. If Trump is removed from office, does that mean the end of his economic policies that have really turned the economy around? He reduced regulations. He cut taxes, created an environment for economic growth. We've had better economic growth since he's done that. And Wall Street's afraid if he's pushed out of office that, and investors are afraid if he's pushed out of office that a lot of these policies will be changed and we'll go back to the economic stagnation we had during the Obama years.
I sit here and I wonder, because I think it's obvious now they're going after Trump in a lot of ways because he is on their trail. He's uncovering the corruption of past administrations, and I think he's threatening to bring it to light, if not prosecute some. And I think that's really why, they're going after. But I sit here and I think, man, can you imagine what if he hadn't have been obstructed, if they hadn't have been doing this, if the media hadn't been lying so much? I wonder where we would be today versus where we are now if they hadn't just been constantly obstructing him, you know?
Yeah, we'd certainly be in a lot better position. You take a look at some of the things Trump has been able to do, and he has every single Democrat against him. Some of his own members of his own party are against him. And I saw 3 separate studies that said more than 90% of the media coverage of Donald Trump is negative. So with all of that, you figure it's very difficult for him to accomplish anything yet. With all that, he's been able to turn the economy around, turn our foreign policy around, and really create a new attitude in America today. The Democrats say, look, they want to cure a lot of these perceived social injustices. They want to help lower-income people, and they do it just by giving them things. We'll give you free health care. We'll give you more food stamps. We'll give you more welfare. Well, the thing is, those people really don't want that. I mean, they take it because they don't have any other choice, but what they really want is the opportunity to earn enough income to pay for those things themselves. Mm-hmm. And that's exactly what President Trump is giving them: a growing economy, opportunity for everybody, and people that take advantage of the opportunity and earn income can now pay for all those things themselves, and they don't need the government to do it. So what President Trump, I think, has accomplished is amazing, especially considering everything that's against him.
I agree with that sentiment. Dr. Michael Busler, we appreciate it, sir. It's always great to have you on. Thanks for spending some time with us this morning.
Thank you. It was my pleasure. Look forward to doing it again.
Yes, sir. Absolutely.